G'day YouTube, Max right here, and I think one of the most terrifying charts for all of crypto is I'm going to show that to you later in this broadcast, but I'm going to cover a few new items, talk a little bit about the world at the moment. I think there's some changes going on in the macro that we want to pay attention to, and we're going to touch on this descending triangle for Bitcoin. It's all going to come together, but that chart that I'm going to show you towards the end of this video is definitely one that you need to pay attention to, because it's what was the predictor for the big 50% drop in March of 2020. Okay, so we'll go ahead and take a look at that. So look, Bitcoin is in this, we're going on almost a couple months here now, of this large descending triangle. Now, 2/3 of the time, descending triangles break down to the down, break down. If it was an ascending triangle, it's 2/3 of the time it breaks up. But so traditionally, these things break down, okay? So that's some pretty bearish news. So we need to factor that in. By the way, I've been really busy the last couple of weeks. I'm selling several of my investment properties this week, and I've been super busy. So sorry, I've been slack on the videos. I did want to share with you that I'm out of my trade. For those, I got out at around 33.5. It just started breaking down here, and I was like, yeah, I'm out of here. So I think I got in at 31,500. I got out at 33,500. So it was around about 7%, 5x leverage, around about a 35% gain. Let me know in the comments below. Are you still holding? Are you out of that trade? Let me know. So we see this kind of falling down here, but you know, we haven't broken the trend line. All is not lost for sure. And there's not really a clear trend line at the bottom. It's more of a trend zone. So I wouldn't really consider this completely broken until below kind of 28 because of this wick. But the further lower we go, the higher probability it gets that we're going to break down, I would suggest. Quick comment on the Bitcoin dominance before we leave the charts. We just see here that the dominance is battling to get up above this resistance zone. Ultimately, I'm not sure it's going to happen here in the near future, but again, my prediction is that the Bitcoin dominance is what's going to lead us out of here. So we really need this to climb up and break through and clear out and head up towards 50. I don't see much movement in the Bitcoin price until we get the Bitcoin dominance surging ahead. And actually, one more thing I want to touch on before we go back. I want to talk about Rune. You know, I'm a big proponent about Rune. I first introduced Rune to you when it was about $20, and I told you at the time it was too expensive. Bitcoin is all the way down, Rune is all the way down to $3.60 at the moment. Okay, so we're talking 85% down from its top. And I want you to know this was triggered by an event. There was a flaw/bug found in the Thorchain protocol, and about $5 million was stolen. Now the developers have put that money back in and made everybody whole, but this is why they have caps. For those of you following the Rune story, they released this product. It's a working product, but they had caps because I believe there is hundreds of millions of dollars, if not billions of dollars, dying to get onto the Thorchain and stake. However, they have got caps because exactly what has happened. This is a brand new technology, and they have caps, and it's very hard to get in and stake your coins on there because those caps fill up fast. But every couple of weeks or so, they raise the caps just a little bit. And this is why they have caps. It's very smart from the developers, and what they did was they limited the losses as these kinds of bugs are discovered. So as a result of that, Rune broke down here significantly. It's all the way down to 3.6. And if it wasn't for the macro news, I'm going to share with you here at the end of this video, I would say that I would jump in on Rune right now in a big way, but I think we might even get bigger discounts. So I'm very excited to pick up Rune even this cheap, but I think we're going to get cheaper possibly. Stay tuned on that. Now, I did want to say, I wanted to draw a contrast here back to the Bitcoin price. Even though the Bitcoin price is down at the very bottom of this channel, I flicked over to the Crypto Fear and Greed Index and was shocked to see that we are only at 24 for this. Now, that's by definition extreme fear, but we've seen it down at the tens plenty of times. Here it is down at 15. Over here, it was on 10. Let's take this out to the 3-month. We've seen this bottom here at 10, 10, 10, 10, 10. I am really surprised it's only at 24. I think for me, I don't know, it's actually a sign of a little bit of strength that the fear and greed index is as high as 24, despite the fact that we are on the cusp of this, the very, very bottom edge of this descending triangle. A lot of those other 10s kind of happen here and here and here and here. And I feel like this is like people have made their peace somewhat, to a small degree. We're only at 24, we're not at 90. And it's a sign that I think that Bitcoin's getting in stronger hands. So people have made their peace that, look, it may go down. I'm not scared of that anymore. I very much understand that it could go down, and I bought in knowing that it could go down. But I bought in knowing that I'm going to hodl through this for the next 6 months, 12 months, 18 months, 2 years, 3 years, 5 years, and I accept the fact that the short-term movement could go down. So I found that very, very interesting that the crypto fear and greed index was as high as 24. Okay, let's leave this stuff here because here's the big one that I want to talk to you about. Here is what I think is the scariest chart in all of crypto in the moment right now. So this is actually, so the red line here is the S&P 500 and the green line is the 10-year treasury yield. Now, some things that you might want to know about treasury yield charts. So bonds, which is what they are, these are known as some people call them the indicator that knows all, or the chart that knows all, or something along those lines. Here's why they say that. Very few retail traders trade treasury bonds because the delta on them is very, very small. They don't move around much, and you need to trade huge positions in order to make it worth your while. Most retail traders do not trade bonds. It's pretty much institutional money only. And so this is just like, it's like the high stakes table at the casino. Only the big boys are there. And it's all, the banks and the Chase and the Wells Fargos and the nations and the sovereigns and all these things. And they're in there and they have access to information that retail just doesn't have. So it's the smartest of the smart money. And you can see that, generally there's this kind of correlation there, but there's been this huge divergence since April. Which, by the way, when was the high in Bitcoin here? Let's pull this back to the 60. This is April 16th. And I never said this. I'm pretty sure I never said this. But I just thought that perhaps maybe Bitcoin was a leading indicator on this one because the stock market didn't go down. It was at all times high. And a lot of things didn't go down. Bitcoin was one of the first to deleverage in a significant way with this pullback of 50%. And what's interesting, if you go back to March of 2020, Bitcoin was the last to deleverage. And I found that very interesting. So once the corona happened, let's go back to, where are we? Let's go back to here. So this massive drop, this graph doesn't look familiar. What am I looking at? That's 2019. Where are we? 21. No, this is it. Oh, this is it. There we go. March of 2020, this drop here. This drop here in March of 2020 in Bitcoin, this happened after, like about 2 weeks after the big drop in the stock market around the world. The stock markets around the world, I should say. Bitcoin was a trailing indicator then. And I never said it, but I had a sneaking suspicion that Bitcoin was a leading indicator with this pullback because I was surprised the stock markets didn't pull back. But for whatever that's worth, it's just a little thing I've had in my back pocket here. Let's go back to this. So as of April, around about the same time Bitcoin started going down, the US Treasury yields started falling. And you can see that you've got this divergence from a normally correlated thing. Now, let's go back and look at the last time this happened. Here we are, and in around about New Year's, I guess this happened, just as the information, it wasn't mainstream at the time. I was talking about it on this channel, but most people, certainly mainstream media, were not really talking about what was going on with COVID-19. That one wasn't being talked about. But from back in around New Year's, the Treasury yields started collapsing and caused this very similar divergence to what we see up here. And eventually, the divergence was caught up when the S&P absolutely collapsed Again, if you look at the timing here, this is late February. This was a leading indicator for Bitcoin. Late February, and then the S&P 500 collapses and catches up with its diverting 10-year Treasury yield chart. So that's the last time this kind of divergence happened. And what do we see? This kind of divergence happening now. And this graph, just if you chopped it off here, it looks very, very familiar. So I just think this is really interesting. So back in 2020, March 2020, Bitcoin was a lagging indicator. It could be that Bitcoin was the leading indicator this time. It collapsed at the same time as these Treasury yield things collapsed. And I just find this very, very interesting. Very, very interesting. And even despite all these charts that I'm showing you, I've really been thinking about my position. You'll know I've been battling for months, wondering about, are we going to have a big crash? Everyone's talking about inflation. If everyone's talking about something, usually I'm like, I'm really not comfortable not being the contrarian. I'd much rather be the contrarian. Everyone's talking about inflation, inflation, inflation. And I was like, yeah, A, that's a red flag for me. But B, I was thinking, the argument for inflation is simple. They're going to just print money and make sure nothing goes down ever, right? And look, history shows that's true. They always print to oblivion. They do. And that is what's worth knowing. I have no doubt that's where it's going eventually. But the question is, do we get another big macro shock? And I believe that they are going to print and print to try and stop that. But I've been really thinking the last few weeks, and it's why I decided to sell a couple of investment properties. I really have underestimated their incompetence in my thinking. It's every now and again I forget just how incompetent they are. I know their goal is to print, but what are the chances of them covering every single base and not getting side blinded? That's not a word. Blindsided. Not getting blindsided by some pension fund over here, some bank in Spain, something over here, and it collapses, starts a trigger, and they were just too slow. So it's another concept, because with regards to COVID, we got months and months. You see right here in the charts, we got months and months of a heads up about COVID before kind of the markets reacted. And I feel like really the government caused the crash with their lockdown talk. And so that was what the cause of it was. They had a lot of time to look at it, and they managed to create this very quick V-shaped recovery. It's because of their very quick response times, relatively so, compared to their normal incompetence, that we did not go further, and it did not trigger a cascade of collapsing asset classes across a lot of different things, across a lot of different nations. And a lot of people say it was a very slow response. I would say for government, it was a very fast response. And what I can see happening now, again, I've realized that now I've got a habit of underestimating their incompetence. Like, I know what they want to do, it's can they actually do it? I underestimate their incompetence. And I do think I'm leaning towards now, hence I sold several investment properties this last few weeks. I'm leaning towards there will be a shock. But I'm very close in the middle because of this. I know what they want to do is print and never let anything down. I think that's what I believe to be true. However, it's their incompetence that I don't think they can actually do it. And I've started to think that I want to be more in a cash position rather than investment position. Now, here is what I'll say. Their response may be slow and clumsy, and there'll be a huge crash. But as I've said to you over and over and over again, it will be crypto, it will be Bitcoin that leads the recovery. I anticipate somewhere in the order of 3 to 6 months after the crash, Bitcoin will go ballistic, right? And so I haven't sold any crypto yet. And so I've just braced myself for a huge fall, could be 50%, because I'm not sure it's going to happen. If my certainty was higher, I would reduce my position in crypto, and I'm just not going to do it. I have reduced my position in other things, and I have a pretty decent sized cash position right now, and I will be buying up Bitcoin if there is this large crash, right? So that's kind of where my thesis has kind of changed here a little bit. Once again, going back a little bit longer, a little bit bigger picture, to me there's only really 2 assets worth owning at the moment. There's crypto and cash, and that's it. If there's a crash, cash wins, great, that gets you through. And if you have some left over after dealing with all the headaches, you buy some crypto. And other than that, Bitcoin's going to outperform everything. Over the next 5-10 years, Bitcoin's going to outperform everything else in my opinion, by an order of magnitude. Bitcoin is going to be the bomb. That's my thesis. That's what I think. Let me know in the comments what you think. For me, there's only two assets to be in, cash and Bitcoin. They're at opposite sides of the spectrum, but that's where it is for me. All right, guys, let me know in the comments below. Does this chart concern you? Does this chart concern you? And by the way, I should point out, I did want to mention this. This is kind of coinciding with the fear stepping up on this Delta strain of COVID. So in Greece, we've got Mykonos bans music in bars to combat COVID spread. Okay, so Mykonos' tourism is absolutely dead. I know, speaking to my family in Australia, they've gone full retard. They're locked down. You're not allowed to leave your house for anything. Like, it's just ridiculous. Like, one family member is allowed to go to the grocery store once a week. Other than that, you stay at home. Pretty much everybody cannot work, and it's just financial suicide and ridiculousness. Look at the what's it called? Just the ridiculousness of the response. French face 6 months in jail for entering a bar or restaurant without a COVID pass, meaning a vaccination certificate there, a vaccination passport. And the business for tolerating them. So what the governments do, they do it everywhere. They outsource the policing of their tyranny to private individuals who have to suffer through licensing. So the business owner who fails to check the status of people coming into their bars and restaurants and business, they go to jail for a year if the police find someone without a COVID passport inside their premises. So there's a business just trying to make money. Now he's got to go and hire money for a bouncer to stand at the front of his venue and I don't know if this extends to like jewelry stores and grocery stores, or is this bars and clubs only? I'm not quite sure. I couldn't be bothered digging into it, but the writing is on the wall that this is just going to get more and more ridiculous, I think. The hysteria around Delta is going up. And I'm not saying it's definitely going to happen, but this feels like January, February 2020, right? These stories start to come out, the hysteria grows, and then all of a sudden the market collapses. At the same time, you've got this chart looking exactly like what happened, January 2020, here it was, January 2020, all of a sudden there's divergence, a couple months later, collapse. Exactly the same story here. Divergence, a little bit later, collapse. So, there's a lot to be worried about. So I really believe this is the scariest chart in all of crypto for everyone. There's certainly some news and some trends backing this up. But we know what happened. Don't fight the Fed, right? That's the counter argument. Don't fight the Fed. The central banks are going to print like crazy, which is extremely bullish for Bitcoin should they do that. We just have to wait and see what they're going to do, and if what they're going to do is in time of it. I suspect their incompetence will win the day, but I've got to tell you, I'm really close to the fence. It's not a definitive answer. You need to be prepared for both scenarios. Massive inflation, massive deflation. You need to understand, you want to create a bet that's going to do pretty well either way in a relatively short amount of time. Like, I'll deal with a Bitcoin collapse of even 50%, like totally, no problem. I'm prepared for it because I believe on the other side of it, it's going to be very, very strong. In fact, I think it'll look like, very similar here. You have this crash, but within 6 months here, not even, within 2 months, Bitcoin was back. This happened very, very fast. So, guys, those are my thoughts. Let me know in the comments below. Do you like this kind of content? I think I'm going to get back into the macro kind of stuff because I think that's where the interesting stuff is here. We might do some more news stuff here in the next few videos. So let me know in the comments if that sounds fun. Go ahead, like, go ahead, subscribe, and I will see you soon. Take care.